Let's face it, COVID changed everything, especially when it comes to payroll. So many businesses opted to hire remotely, which put them in new states that they weren't familiar with. Unfortunately, many business owners didn't realize that they had to do some things differently to get that employee set up correctly for payroll. For example, for my QuickBooks users, that work location that you select in the system dictates how the employee will be taxed. So if you use the business address for all of your remote employees, all of their taxes are wrong. This creates a ton of issues, not just for you as the employer, but also for the employee. So number one, if you put the employee in the wrong state, then you may have incorrectly reported those wages to the wrong state for income tax. You may have withheld the wrong state's income tax, which would be a different rate probably than their correct state. And you probably reported the wages to the wrong state for unemployment purposes. So to correct these issues, it is a multi-step process. Number one, you're going to have to go back and figure out when you became liable in the new state and register for the proper tax accounts. So that will be withholding if the state has income tax, unemployment tax, and possibly local taxes or paid family medical leave. Once you have that done, then you're going to have to go back and amend the original tax returns where the wages were incorrectly reported. That's going to be zeroing out those wages. And for state income tax, if you withheld amounts from the employee's check, you're going to then have to go through the process of getting those amounts credited back to you, which is usually a very long process. In the interim, you're going to have to go and report the wages to the correct state. So again, if the employee had income tax withheld, now you have two options. Number one, you can refund the employee the amounts that were withheld and just report $0 withheld to the correct state. Or number two, you can report whatever was withheld for the wrong state to the right state, make that payment, and then wait to get made whole by the state where you originally reported the wages and taxes. You're also going to have to issue a W-2C if you've already done W-2s for the year so that you have the correct state on the employee's W-2. And then lastly, you're also going to have to do a 940 amendment because there was FUTA credit reductions last year, which means if you reported wages to the wrong state that had a FUTA credit reduction, you might have paid it unnecessarily. Or conversely, if you reported wages to a state that didn't have one in error and should have reported it to a state that had a FUTA credit reduction, you might owe some money. So you have a lot of amendments to tackle if you did unfortunately make this error. In addition, you probably need to check with your workers' comp carrier to see where those wages were reported for workers' comp purposes, and you may need to ask them to reclassify those wages as well. If you're freaking out right now because you know you did this, it's okay. We're going to get through it. In QuickBooks, if you have a bunch of errors telling you we can't do this and your TPA isn't assigned and you need to file these and you have past due tax payments, just give us a call. We'll be happy to take a look, tell you what we can or can't do, and make a plan to move forward if you'd like to work with us. We can take care of registering for your state tax accounts, amending all your tax reforms, doing your W-2Cs, and then also making sure that everything gets put back on track in your system so that payroll can be good moving forward. Payroll is much more complicated than people realize, and multi-state employers are probably quickly coming to terms with this. One last thing to keep in mind with multi-state or remote workers is you also have to be aware of the compliances of each state. Each state is going to have different rules for how often employees have to be paid, paid time off requirements, when are final checks due. Some states have local taxes, some have paid family medical leave, some have different overtime rules. So in addition to making sure that the taxes are set up correctly, you also need to make sure that you are aware of the compliances of the states where you have remote workers. As always, if you have questions, please don't hesitate to reach out, or you can find us online at valorpayrollsolutions.com.